Oh, Zoom. So they had their first billion-dollar quarter and yet their stock is down 10%. Let's talk about it. So, should I buy the dip or stay away? So even though they beat estimates this quarter, they lowered guidance, which means lower growth. Also, this quarter they grew 54%, which sounds amazing, but it's the lowest growth that they've had in their history. Now, we can't really penalize them too much for this because they did have the best year ever last year because of the you-know-what. Now, the stock is likely to continue to fall in the near term because of the global reopening, because PE ratio is about 75 times. And now long-term revenue growth is about 20%. We also can't forget Google and Microsoft, who are becoming competitors. Should we buy this now? I think it's overvalued, but I do think that it is a good long-term high-growth stock, especially with the acquisition. Follow for more.